Hey everyone, welcome back to Ajay Joshi Chemicals. In today's video, we are going to talk about four high growth Indian chemical players where I'm seeing major cyclical as well as structural reforms happening. And because of these positive reforms, the companies are poised on a high growth trajectory. Before starting the video, important disclaimer as always, this video is only for educational and informational purposes. Always refer to a SEBI registered broker while making any financial decisions. A lot of scams are happening in the market. Do not use any random YouTube video or any random social media person as a guidance for your investments. It's your hard-earned money, so keep it safe. Now, without further ado, let's get started with today's video. Okay, let us start off with a company called UPL. UPL, which is an Indian agrochemical major, also one of the top 5 global agrochemical companies, plus only Indian chemical / agrochemical company, which is one of the top 5 global companies. So moment of pride for India. But coming to their business, last 1.5 years, they have been pretty hard for the global agrochemical sector. We had a lot of excess inventory in markets like North America, in markets like Latin America, two of the biggest import dependent consumers of agrochemicals, because of which a lot of fresh order movement was not there. Plus China was extremely competitive. They were dumping off their excess inventory into these markets, so Indian exporters were losing out on the market share. UPL was one of the major brunt bearer of this phenomenon because Latin America happens to be one of their largest export destinations, around 30-35%, and then North America, which is mainly actually USA, where 10 to 12% of their export business comes in from. So because of the adverse market situations, UPL was not doing well, their business was not doing well, they were taking hit on their volumes, they were taking hit on their margins. A lot of problems were happening in the company in terms of structurally also churning out people, carving out businesses, etc., etc. But now the agrochemical cycle, as I have been saying, has already passed that excess inventory situation. Fresh demand has been coming in, so UPL is seeing major turnaround. One of its main product, glyphosate, where always there's a price war kind of situation, it has seen around 8 to 9% of price increase. So which is a very good indicator. Right now, I think the glyphosate prices of UPL are around $3.5 per kg. They used to be around 2.9, even $3.2 per kg in the month of May and June. But July onwards, we saw a price increase because the Chinese glyphosate prices have also seen 6 to 7% of price increase in the July month. Because most of China's glyphosate, in the June, July and August period, most of their shipment goes to Latin American market. So since Latin American market is having very strong demand, fresh demand, because the excess inventory is over, the Chinese volumes are moving very fast and China is not able to cater to that demand. So UPL has also done significant price increase in the glyphosate pricing. But the problem is that China is extremely competitive in the Latin American market, so UPL might not see a drastic volume growth in glyphosate exports to the LATAM, but they would see significant margin growth. They would see improved margins compared to previous quarters. Similarly, Mancozeb, which is again the blockbuster product of UPL, their UPL is a global leader because of scale. They have multiple plant locations in India as well as outside of India. So for Mancozeb also, UPL has announced 5 to 6% of price increase, particularly in China. This happened last week. So there they have companies, they have JVs basically, or joint setups with companies. They call it UPL Jiangsu, UPL Shanghai Limited, plus Beijing Yanhua Biotech Company, which is again a JV. So all the UPL subsidiaries and associate partners in China have announced 5% price increase in mancozeb pricing. Even in products like glufosinate, we are seeing price increases. So these price increases, are happening from China, and in turn Indian exporters are also increasing their prices. So UPL, which has long struggled with stagnant or declining pricing of their products, particularly glyphosate, mancozeb, glufosinate, is now finally seeing improved pricing, which is a good indicator. However, I would continue to remain cautious of their volume growth because of Chinese competitiveness. They would lose out on supply share in the Latin American market. They cannot compete with Chinese in terms of pricing, in terms of lead time, in terms of FTAs in the Latin American market. But because of the overall agrochemical sentiments improving, UPL would have better margins and better pricing going forward. Similarly, another company called Coromandel International, there I see very good growth coming in. They are getting benefited from the whole China plus one import substitution theme, plus also they are getting benefited from their acquisition of NaCl. So I see the domestic formulation business, the domestic fertilizer business to see good volume growth as well as good value and margin growth. Plus in the export market, I see volume growth momentum to sustain, although we might see pricing pressure in the export market. The good things that are happening with Coromandel right now: aggressive expansion and integration, aggressively expanding. They have 900 plus retail outlets, 10 plus new products they have launched. They just got backward integrated into rock phosphate mining in a country called Senegal, which is a good thing. They would have access to cheaper phosphorus base, which is essential to make a lot of fertilizers. Then they are also diversifying into high margin products, high margin intermediates, high margin agro formulation with acquisition of NaCl. Plus a lot of work is going on in the nano fertilizer segment. This whole China plus one theme, because China has curbed export of a lot of specialized fertilizers to India, and Coromandel has been a front runner in making those sort of fertilizers in India. So make in India, for India, this whole import substitution theme, this company fits in amazingly well. So Coromandel International, again, I think is ripe for very good growth going forward. Okay, now another company which is also getting benefited with this whole upturn of the agrochemical cycle is Sharda Cropchem. Interesting business, asset-light business model. They mostly import the agrochemicals, technicals from China and then export it under their own registration in the European market, in the North American market, Latin American market, and multiple other countries. But Europe happens to be the biggest market for the company, and company has seen significant growth in terms of volume as well as in terms of revenue in the last quarter in the European market, because like I said, fresh demand has been coming in, plus because there's an increased cost of production in the European market. The local manufacturers are not manufacturing on a larger scale, so the import market has become bigger in the European agrochemical market. That means previously, let's say they used to make 70 kg out of the 100 kg agrochemical demand locally. Now they are only making 40, 50. The rest is all getting imported, and companies like Sharda Cropchem, couple of Chinese companies, couple of other Indian companies are getting the most benefit out of that. Another interesting thing, I was noticing about Sharda Cropchem was that in the last quarter, although their agrochemical business revenue grew by 11 to 12%, the non-agrochemical business revenue grew by around 60%. Which is a very good sign, because agrochemical, like I said, is a cyclical business. We had one and a half years of bad times. Now we are having good times, and in future we might see another downturn in the agrochemical cycle. But the way they are increasing their reliance in the non-agrochemical business, it's a good indicator that they are diversifying and moving away from this whole cyclical agrochemicals business. Although they would continue to remain in the agrochemicals business, but the non-agrochemical part would also become significantly bigger. Going forward also, since the agrochemical market is doing good, signs of recovery are there, and inventory levels have declined in the European market and the American market. Also from China, we are seeing good price increases. So these whole things would give Sharda Cropchem major benefit. They already have close to 3,000 products registered. Around 1,000 new products are in the process of getting registered. Top 3 revenues account for around 14% of their revenue, while top 10 molecule accounts for only 36% of their revenue, which is again a good thing. They have a range of agrochemical products. Even if some agrochemicals are not doing well, some agrochemicals are seeing regulatory challenges, bans and all, they do have huge basket of products. So again, Sharda Cropchem happens to be one company that we all need to keep in our radar, because I think it is a high growth company, and with the whole agrochemical cycle turning around, it would be a major beneficiary in the export markets. And last company where I am seeing genuine structural reforms, and I think that by the end of this year, this company would emerge out to be a true blue specialty chemical company, is Aether Industries. I have always liked the company because I like the whole demand first, get to know your customers first, and then put capex kind of business model. Contrary to a lot of Indian chemical companies which are capex heavy, first they set up the capex and then they start hunting for customers randomly. That does not work out in today's scenario. That's why most of the Indian chemical companies end up being commodity chemical companies. But Aether Industries, the way they are working around their products, they want to reduce their reliance in the life science segment, that is pharma and agrochemical segment. They want to grow new verticals like oil and gas chemicals, high performance material science, and CSM. Oil and gas segment seems to be a promising one. Company expects 30 to 40% of their revenue in the next 2 years coming in from that segment. Even today, they have successfully reduced the reliance in the traditional life science segment, pharma and agro segment. Last quarter, 46% of revenue came from pharma and agro. Rest revenue came from new segments, which is a good sign. The company's projects got delayed due to a fire incident that took place there, but now the company has came out of it, so hopefully we will see faster execution of the projects. Exports are around 33% of revenue as of now, so I see huge potential to grow their export business, and company has chosen right business of oil and gas to grow their export presence in the US market. US happens to be one of the largest refiners in the world, and company's products, specialty proprietary blends that go for enhanced oil recovery and refining, I think it's a right fit. US is a net importer of oil and gas chemicals, so Aether is getting into these oil and gas chemicals to cater to the US's demand. They have hired amazing team of people locally in the US market, which is another good move, because that way they already have people who have done that business in the US market. Then in the material science and polymer market, the Milliken contract, which is a 10-year contract, the site is under development, and Aether will be the sole supplier for 10 years to Milliken of a very high value, high margin specialty polymer. Then we are also seeing another vertical, contract manufacturing, getting built. This business would start fetching results to the company by mid of next year. So we would have to wait for that. But yeah, overall I'm seeing, the company is doing very good in terms of moving away from traditional pharma and agrochemical verticals to oil and gas, material science, contract manufacturing. Plus, they are also doing a lot of tech associations with Saudi Aramco, Baker Hughes, this Milliken thing. I think amazing moves. Company also needs to grow their exports, like I said, and they are making right waves. In US, they are doing oil and gas. In Middle East, they are targeting oil and gas and high performance materials. In Japan, they are working on custom synthesis molecules. So overall, I see this company is poised for growth by end of this year. Again, I'm reiterating, I'm very bullish about this particular company. We would see major growth coming in terms of revenue, in terms of margins, and of course in terms of volume towards the end of this year for Aether Industries. With this, I would wrap up today's video. I hope you liked the video. I have tried to keep the video short but also informative. Again, disclaimer that this video is only for educational and informational purposes. Kindly do not refer to or use this video to make any sort of investment decisions. Always refer to a SEBI registered financial advisor for any financial decisions. Stay safe and I will see you soon with a new video. तब तक के लिए नमस्ते and Jai Hind.